EV startup Rivian caught the market's attention recently when it revealed that its vans would no longer be exclusive to Amazon as the 4-year exclusivity agreement between the two companies ended. This opened the door for other companies to do business with the EV company, and AT&T quickly jumped on the opportunity, signing an agreement to see Rivian vehicles in its fleet in early 2024. The news boosted Rivian's stock, and even though it gained 22% this year, there's still a lot of potential for future growth that could reward investors. This is why we'll explore the catalysts that could boost Rivian's stock in this video and help the company on its path to profitability, so stay tuned. Welcome back to PST Markets. Rivian became a public company in 2021, the same year it launched the world's first electric pickup truck. It was met with great fanfare in the market, but the company has been on a roller coaster ride since its IPO. Trouble started for the company in 2022 when its stock tumbled by 9% after it had to recall nearly all of its 13,000 vehicles on the road to fix a steering defect. Then Rivian stock fell by 17% in August following a 140% rally that lasted for 3 months, possibly because investors started taking profits. So far this entire year, Rivian's stock has gained 22%, but it's trading around 71% below its IPO price of $78. So investors in the company were relieved to see some good news in the third quarter results finally. One massive development that Rivian announced during its Q3 results was that it will allow more customers beyond Amazon to purchase its commercial electric vans. The agreement with 17% shareholder Amazon, made in 2019, included provisions preventing Rivian from selling its commercial vans to other customers, providing Amazon with exclusive access to them for 4 years. Following this news, on December 14, telecommunications giant AT&T announced that it will begin adding the Rivian commercial van and R1 vehicles to its fleet in early 2024. In addition to that, the partnership between the two companies sees AT&T as the exclusive provider of connectivity to all Rivian vehicles in the US and Canada. AT&T had previously revealed that it's committed to achieving carbon neutrality by 2035, and according to the telecom company, adopting Rivian's electric vehicles into its fleet is part of its plan to cut transport emissions and carbon footprint. With AT&T also being the provider of connectivity to all Rivian vehicles in the US and Canada, the automaker is provided with a more connected driving experience, using over-the-air software updates to consistently improve its vehicles with new features that elevate the driving experience for its customers. Adding to the good news, the company's Q3 results were better than expected, recording a revenue of $1.34 billion, a 149.44% increase from the same period in the previous year, and beating estimates by $22.36 million. Even though Rivian is still operating on a loss with an EPS of negative $1.19 in Q3, it still beat estimates by $0.13. The news caused Rivian stock to surge by more than 33% in December, as interest in electric pickup trucks increased following the release of the market leader Tesla's Cybertruck. However, there are other factors that could lead to massive growth for Rivian in the future. The main one is how Rivian is positioned in the market compared to its peers. For instance, while Rivian announced better than expected Q3 results, automaker Ford announced that it would cut in half its production of its F-150 Lightning, the electric version of its best-selling pickup truck, citing changing market demand, according to a company memo obtained by Automotive News. In fact, Ford sold only 3,503 F-150 Lightning pickups in Q3 of this year, compared to 186,974 vehicles of its non-electric F-150 model, which is this year's best-selling vehicle in the United States. Meanwhile, Rivian raised its 2023 production guidance to 54,000 electric vehicles, up from 52,000 in August. The company stated that this increase is due to progress on its production lines, the ramp-up of its in-house motor line, and the supply chain outlook. According to the company's Q3 earnings call, it managed deliveries of 15,564 vehicles out of 16,304 vehicles produced in the quarter, recording a loss of $30,648 per vehicle delivered. Despite that, it's still an improvement from last year's 6,584 vehicles delivered, with a $139,277 loss per vehicle. Another factor that could help Rivian in the future is the expected improvement in the company's gross margin thanks to the declining lithium prices, which fell by 81% since the beginning of 2023. Additionally, The expected federal interest rate cuts in 2024 will reduce the company's borrowing costs and allow consumers to borrow money at a lower cost, which could increase sales of vehicles. Also, even though its agreement with Amazon ended, Rivian still remains committed to delivering 100,000 vans ordered by Amazon by 2030. This ongoing relationship with Amazon, coupled with the new deal with AT&T, shows Rivian's growing influence in the EV market and provides potential growth opportunities in the future. Another advantage Rivian has is its focus on electric pickups, which could position it as the dominant company in that market. Other EV startups, such as Lucid and Fisker, are struggling to compete in the market, delivering 1,457 vehicles and 1,097 vehicles, respectively, in stark contrast with legacy automakers like Ford, which delivered 20,962 vehicles, the second highest number of EV sales in Q3 after Tesla's 435,000 vehicles. These companies recognize the opportunity in the electric pickup market as well. Fisker announced its own pickup truck, Fisker Alaska, which is set to be released in 2025, and Lucid previously revealed plans to release an electric pickup truck by 2030. However, Rivian has the benefit of an early market entry that allows it to compete with legacy automakers in the electric pickup segment, and its focus on the segment allows it to sell and produce more than a normal EV startup. Even though electric pickups are still a fairly new concept in the EV industry, with just 2% of all pickups sold in the United States this year being electric, and the electric pickup share of the EV market being only 3% in the first 9 months of 2023, the market is growing for the long term. In fact, the electric truck market is expected to grow at an annual growth rate of 34.2% from 2022 to 2023, fueled by government's increased focus on emission-free vehicles and policies in commercial and logistics sectors. This is evident by the Biden administration announcing the goal of having 50% of all new vehicle sales be electric by 2030 and announcing the EV Acceleration Challenge, which is a call to action from the White House to all stakeholders in the industry to dedicate resources and make commitments in order to support this historic transition to electric vehicles actively. While all of this seems good for Rivian, the company is also facing troubles that must be considered by investors. For starters, Rivian is continuing its construction on a $5 billion plant in Georgia, which is intended to be the company's largest production facility. But this comes with a risk. This is because the state of Georgia and local governments plan to provide Rivian with $1.5 billion in subsidies, which has been met with a legal challenge that has halted the subsidy. Despite this legal battle, Rivian is still moving forward with construction on the plant and is expected to begin production in it as early as 2024, which could mean that the legal challenges aren't enough of a big deal to stop the company's activities. Rivian also had to cancel an agreement with Mercedes-Benz to produce electric vans in Europe, stating that it decided to focus on developing and producing Rivian's own vehicles, preferring to focus on the short term. However, the door on this partnership isn't completely closed, with Rivian saying it would still be willing to team up with Mercedes-Benz later. With all of these factors in mind, Rivian could be a great investment opportunity for long-term investors who don't mind the fact that the company still has a few years to go to reach profitability as long as it's poised for strong future growth. Rivian stock saw impressive growth in December of this year due to great Q3 earnings results and the conclusion of Rivian's exclusivity agreement with Amazon. Now, the door is open for the EV startup to do business with other companies, the first of them being the United States' leading telecommunication company, AT&T. Rivian is set on increasing its production and dominating the EV market's small electric pickup truck segment, which could lead to the company reaching profitability and completely owning the segment. If you're a patient investor who doesn't mind waiting until that happens, this could be a good investment opportunity. That is everything for now. What do you think of Rivian's progress? Will you be investing in the company? Please let us know what you think in the comments below. And if you haven't, please subscribe and leave a like for this video. Your support helps us continue our work. Thanks again for your support, and I will see you in the next one.